And what about valuations? When you look at some names, I'm going to throw out Nvidia, right? That's the poster child for this market. I think it was up 170% in 24. Are you concerned about valuations with Nvidia or any other names?
So generally speaking, PE ratios have been rising over time. And why is that? It's because the price is driven by debasement of currency and earnings don't go up as much. They're driven by GDP. So if you're debasing the currency by 8% a year and GDP growth is 2% a year, earnings from a corporate level grow at 2% a year or whatever the overall number is, 5%, whatever it is, nominal GDP. So let's call that 5%, while debasement is growing 8% a year. So the P ratio keeps going up. So we can't use that. But, are people over extrapolating the impact on revenues of AI and stuff like this? Probably. But, don't forget, go back 10 years, 10 years, 12 years. Yeah, between 10 and 12 years ago, 10 years ago, Amazon was trading at a P of 600. Still was a pretty good investment. So it depends on the rate of growth. However, my general construct is this year will be a good year. We will go to much higher valuations. And then after we've rolled the debt, we tend to tighten liquidity because the inflation pressures have come back somewhat. That tends to draw down the markets. We kind of reset again before we start this cycle all over again. My working hypothesis is this is going to be, valuations will get expensive this cycle. The correction may not be large, maybe just be a year of sideways, down 15% something. But the next cycle, because that's when AI, robotics, self-driving cars, missions to the Mars, all of this starts hitting, we will go to a full bubble cycle. And then we can think about what the world looks like after that. So I kind of think we're in a golden bull market, at least until the end of the decade.
And so if I speak to you in a year from now, do you have a target for the S&P?
It probably does another 20% from here.
That's good news.
Nvidia's recent stock market performance has been a hot topic among investors, stirring excitement and a flurry of discussions. As we edge closer to Nvidia's forthcoming earnings report, analysts like Raoul and Evercore ISI have made a surprising move, suggesting this is an opportune moment to buy. The stir in interest is largely driven by Nvidia's robust fundamentals amidst swirling uncertainties and an unexpected $600 billion sell-off. Welcome back, everyone, to Investocracy.
Is because there's a short number of people, large demand for the services. AI has just made that knowledge a zero. People don't get it yet, but it's all a zero. Being a content creator, creating a media company, a zero. Making films, the cost of making a film will go from $100 million to $5 million or $2 million. So that's the cost element. On the manufacturing side, we're bringing the robots in. So what is the expensive thing of a manufacturing? It's the people. Well, you're just going to get rid of them. Okay, so we're kind of laying off a lot of jobs. Everyone understands that about AI over time, but it's offset by an aging population. So there's less people in the labor force anyway. So that is not the bit that concerns me. The bit that concerns me is what does it mean for your business or my business when we're replaced by AI? What does it mean for financial markets when we have artificial superintelligence, ASI? Well, as investors, we're replaced because somebody can do it better than us. Somebody can do everything better than all of us. So you start thinking, well, I'm not sure how financial markets even work. Do they just Well, I don't know because it's not going to be run by human emotion. It's going to be run by machine emotion or machine logic. Then we start thinking, well, the other thing about AI is right now we've been living this software is eating the world revolution that Mark Andreessen talked about many years ago and the rise of SaaS software. Well, now it's pretty close already. let's say you've built a beautiful new platform for whatever, financial advice. I can say, hey, I want to copy Jimmy's platform, but I want it for the Indian market, doing for their regulations, and it'll build it in less than a minute. So what moats do we have around our business? And what moats do we have around the fact that you and I got paid for knowledge? And that scales everywhere. So humans will find new ways of making a living. And I think the online communities is one way, because humans are social creatures by nature. So they want to be around other humans, they want to be talking to each other. But the world is going to fundamentally change in ways that we can't understand. We've never not been the top of the intellectual tree. But if you look at AI, it went last year from an IQ of 90 to a high IQ of 157. So we pretty much doubled. If we double in IQ, we get to 300 next year, which is more than any human ever recorded. And then the year after that, 600. Then the year after that, 12. I mean, this is La La Land, right? So I kind of thought about this and thought, with the exponential change that's coming in all of this technology, even longevity increases for humanity as genetic sciences use this and nanotechnology, is that we don't understand what the world is. And so when I come into a process of massive change, it's going to create societal disruption. It's going to create enormous opportunity, but in ways we don't yet know. The answer for me is, if they still have to continue to roll the debt and debase the currency and drive asset prices up, let's use this opportunity to make as much money as possible, that when we go into the early 2030s and the world is starting to move in ways we don't understand, where the study of economics doesn't even really work anymore, that we'll be secure.
Analyst Mark Lipacis at Evercore ISI labeled Nvidia a tactical outperform, pegging an attractive $190 price target, a steep 42% climb from its prior standing. Such optimism is fueled by Nvidia's ongoing innovations, such as NIMS and NeMo, which promise groundbreaking flexibility for enterprises in cloud and on-premises operations. This, alongside liquid AI's advancement, has set a new benchmark for what programmable platforms can achieve, solidifying the importance of Nvidia's tech prowess. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
We've got a convergence of three technologies that are driving both humanoid robots and robotaxis forward. Robots themselves, energy storage, so battery technology, and artificial intelligence. Those three technologies converging are creating all kinds of opportunities. And humanoid robots, I think, I will tell you, while full self-driving took a lot longer than we expected, humanoid robots are developing faster than we expected because of the expertise that has evolved around full self-driving. It's the three same technologies converging. So we're pretty excited about that. And, you know, humanoid robots, we have a sense of how much productivity they will introduce. We have a sense because we actually have old-fashioned robots in our homes already. So washing machines. Before washing machines, believe it or not, people spent a lot of time washing clothes. And with the washing machine, the time savings are now something like 85 or 90%. We think the same will be true for many other household chores. Importantly, food preparation and cleanup in the home. So that's going to be pretty exciting. And on the manufacturing front, We've already seen robotics in action. The assembly line 100 years ago saved 85% plus of the time to manufacture one car. So we're familiar. It's just all of this now is speeding up thanks to the convergence of robotics, energy storage, and artificial intelligence.
Despite all the possible concerns, the consensus among market analysts, including voices from Morgan Stanley, is that Nvidia's future remains promising. They anticipate a favorable report bolstered by stabilizing demand for Nvidia's Hopper chips and expanding Blackwell supplies. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Those tech stocks yesterday at this hour were down significantly. You were talking about the NASDAQ down by 1,000 points in the pre-market at this hour. We want to bring in a guest to talk a little bit more about this. Joanne Feeney is partner and portfolio manager at Advisors Capital Management. And Joanne, the sell-off that we saw in the tech stocks, was that a buying opportunity for you, particularly in names like Nvidia or Broadcom? What did you think?
Yeah, good morning, Becky. You know, we're longtime investors. We already have pretty decent-sized positions in both Broadcom, which we've owned actually for 10 years, and also Nvidia. So the news out yesterday obviously started a lot of people, but it doesn't fundamentally change our view. In the long term, AI demands and applications are going to continue to drive the demand for compute power. And we can get into the details of why, because it sounds a little counterintuitive given what we heard yesterday.
All right, why?
Yeah, so, you know, it's pretty obvious that these guys have come up with a more efficient model. And because it's open source, people are right now, you know, checking the veracity of the efficiency of the training part of it, but also the inference part.
Yeah.
And if they've come up with something that really is more efficient, terrific. Imagine all the new applications that will be able to spring out of something like that. But the chip guys, NVIDIA in particular, really took it on the nose yesterday, including Broadcom. And the question there becomes, if you're Amazon, if you're Microsoft, and all of a sudden you have a more efficient model, are you going to, you know, take your foot off the accelerator and say, okay, I guess I'm done. I don't need to spend all that money. In the meantime, Microsoft across the street is now taking advantage of it, buying all those GPUs and delivering something even better. So one has to look beyond the obvious to the competitive forces between the AI providers, OpenAI, Amazon, Microsoft, to really figure out how much they're going to spend. And there's great analogies from the past on this.
As we approach Nvidia's much-anticipated earnings report announcement, the stakes and excitements are high, inviting investors to consider Nvidia as a robust addition to their portfolios. Several critical points emerge: the capability of Nvidia in navigating tech challenges, its continuous technological innovations, and a resilient market position as reflected in analysts' suggested price targets. But what do you think? Do you share their sentiment about Nvidia? Share your perspective. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.